I used to type up like 2,000 names a night. And I would pride myself on doing this, saying I'm working harder than everyone else, right? And what I learned over time, that's a fool's errand because it made my universe too large, and then I'm not focusing on the best stocks. So now how that has optimized, it's, I'm keeping a tight watch list full of the leaders, and then I'm trying to wiggle in these names using technical analysis. So I'm not trading small caps or earnings list names under the 200 day. And names with liquidity constraints. I want this strategy to be able to build up to $100 million portfolio. I'm trading higher ADR names. That's where the most trading higher ADR names. That's where the most opportunity is. If I can have tight risks, I need that wide expansion during the day. We're focusing on the highest time frames first, and we're letting earnings season guide us. And a stock is typically 40% the market, 30% the sector, 30% itself. It's a famous trading quote. Where did it come from? So a study from 1966, Benjamin F. King at the University of Chicago, he talks about market and industry factors in stock price behavior. He applied factor analysis to 63 NYSE stocks across 6 industries using monthly changes in log price over 403 months from 1927 to 1960 in these industries, right? And the core question was, to what extent can a stock's price change be explained as the weighted sum of a market effect, an industry effect, and a company effect? And what were the findings? The findings were that stock's variance decomposes into the market, industry, and firm-specific findings. The original findings were it was 50% market, 10% industry, 40% stock. That was coming right out of the Depression era, right? Where, after such a drastic down move in stocks, names are going to trade differently. They're going to be much more a factor of the market when 80% of the market is wiped out, right? As the end of that study went on, the weighting shifted towards that 40%, 30%, 30% that I just mentioned. And the implication here is 60% of a stock's move is decided before you ever analyze the company. You just have to get the market and leading group right first, and that gives us an empirical basis for leading names and leading groups. That's kind of what transitioned that thought process of typing up 2,000 names a night versus I just need to be on the hottest 30 stocks, 20 stocks, and just focus on them and just wiggle my way in however possible. Earnings season is my highest, is where I have the highest activity levels by a landslide. And that's because the opportunity set is highest. So I want the action to pull me in via change of composure. And how I'm researching fundamentals, I'm letting the action tell the story first. I'm such a big believer in technical analysis. They're going to tell you when there's game-changing news, and then we research after. Again, we want to save as much time as possible in researching. There's 5,000 stocks out there.